Hi, I'm Peter Cooper, here today with Gerhard Schubert, the head of precious metals at Emirates NBD Bank down in Dubai on the famous creek. Good morning.
Good morning, Peter.
If I could start with a question about the precious metal prices. We were here a couple of months ago just down the road in the old Dubai gold souk, looking at prices, and at that time prices were rather depressed. Things have got much better since then. Can you tell us what happened and why prices have moved up recently?
Surely, Peter. One of the main reasons that the prices came so depressed in the last quarter of 2011 was that a lot of financial institutions had their end of fiscal year for 2011 at the end of November. The selling, profit taking and booking some profits doesn't hurt anybody. In addition, there was the quite openly discussed need for rebalancing of the commodity index, which always takes place in the first couple of weeks in January. And for example, the investment out of the UBS Dow Jones and Goldman Sachs commodity index, from that rebalancing or to be expected rebalancing in January, it became quite clear that some decent amount of gold and silver would have to be sold, and the market positioned themselves short.
There is always a contrary view, and one view at the moment is that the US stock market could be peaking out now. I mean, we've had a very strong rally since the beginning of the year. And if you look back to 2008, once the market hit the top, from there on, obviously the market fell down considerably, but precious metals actually moved up from that point. We had about sort of 30% on gold, 50% on silver over the next 6 months. So there is a possibility that if the market had become oversold now, precious metals could be in for an upsurge. I mean, it's never 100% sure with gold and silver, is it?
That's right, Peter. That could very well be the case. But I would like to take you back in time to 2008. From then, first of all, it was the banking crisis. And from them, seamlessly, we slithered from one crisis into the next, into the European. The first ever downgrade of US AAA rating. Silver is always be the much more volatile metal, in good days as in bad days. All I'm saying is that probably a little bit more cautious, a little more neutral re-evaluation would be wise or would be advisable. I think we are already in the process of building significant short positions on the futures market.
So that brings us sort of to later on this year. Well, then we have the US presidential election. And some people are wondering now what happens to the dollar after the US presidential election. Are we going to see a weakening again of the US dollar, which would probably be very positive for gold and silver? Do you think that's a probability?
One of the issues is the economy or the currency wars, the debasement of currencies which take place. At the moment also we have no indication from the Fed whatsoever, and part of the recent liquidation which we have seen was that there was no hint given and the hurdle has been set higher for QE3. It does not mean that it's not coming. There's enough people out there who are looking firmly towards the third, surely towards the fourth quarter, for QE3 to be reintroduced. That would definitely be a positive signal for the precious metal prices. The balance sheet of the central banks, of the Fed and also other central banks, the Bank of England is doing quantitative easing, would be more blown up by these measures, and that should be positive for commodities and especially for gold in these cycles.
Just one final question. Your own customers, have you seen increased demand now for gold and silver, and is that a factor?
We have definitely seen increased demand for gold. In the weekly report, I can only describe that we still do see physical buying on an ongoing, permanent basis from our customer base. A little bit different to, let's say, like the slowing demand which we see from India. But there are other reasons for this. There's also now the talks about the rise of the taxation for gold in India, which could lead to lower demand from India, but that's what we've seen. Our customer base is still very, very strongly engaged in gold-related products, and most of all, to be honest, in physical products.
Gerhard, there's clearly more to talk to you about in the future. Thank you very much today.
It's my pleasure. Thank you very much, Peter.